Welcome back. We are here on Ethereum looking at the cryptocurrency market, and this is going to be my daily forecast for Thursday, February 4th, 2021. If you'd like to support our channel, you're welcome to hit the subscribe button down here in the corner, hit the like button, the bell button to see our newest videos, and you're welcome to join us over at Patreon, where you can get access to our full technical analysis, our signal service, and also our online trades and courses. The link is down below. You're very welcome to join. So we'll start by looking at Bitcoin. As you can see, we have rallied quite significantly today. We're roughly up around 5% at this point, trading at 36,756. Technical indicators are looking very bullish and very nice for Bitcoin at this point. It looks like we have reached the bottom here at the 50-moving average, and now we are ready to retest the $40,000 level. Breakdown from here, you should find a lot of resistance at the 20 exponential moving average. A break below that opens the door to the 50 at 31,364. Otherwise, we are most likely going to retest 40,000. So it looks like Elon Musk's tweet pushed this to the upside. We did see this massive rally pull back, and then we basically took off. So cryptocurrencies are rising again together with indices, stocks, and so on. So let's look at Ethereum. So Ethereum just is continuing breaking records. At the moment, we're trading at 1622. We have been rallying, I don't know how many percent, like around 15% the last 2 days. I don't have the count of this at the moment. However, we're getting very, very overstretched. So we are at the point where it is just not tradable. It is expected to break down quite substantially towards the middle here of the Bollinger Band. So a pullback to 1325, that is highly likely at this point. We're just way, way, way overstretched. Technical indicators are still looking very bullish. MACD has just crossed the signal line. Stochastic is very bullish. The same goes for the CCI. We were up at 263, and here in the RSI, we are at the edge. We are basically on the edge of being overbought. If you look on the weekly chart, we can see that we are substantially overbought in Ethereum, and at any point this could fall significantly. I would not be surprised if we saw a fall all the way down to 1,000. However, I think that this area here at roughly at the $1,200, $1,300 level, that should be where this market would settle and then continue higher. So let's look at the XRP. So as you can see, we have rallied and gave most of those gains back. This is a really, really volatile cryptocurrency. We can just see this move here, roughly 60% to the 35% to the upside and 60% to the downside in just one day. So it can be very volatile. Actually, haven't seen a move this aggressive basically ever anywhere. So yes, hopefully nobody bought it here, because they have most likely lost half of their investment at just this trade. So at the moment, we're still trading above the 20 exponential, still above the 50 and the 200 moving average. As long as that is the case, there is hope for increase in the value of this cryptocurrency. So I think that we are heading towards 0.50. That is where most likely we'll go the next week or two, probably at the end of February. And long-term target is most likely 0.75. So 0.75 has been significant resistant in the past. We just cannot break that level by doing this parabolic moves. We need to gradually grind to the upside. So yes, we have been here before, also here. We tested this level 4 times at least in the last 2 years. So we'll see. But as long as we're trading above the 20 exponential, this will gradually go higher. So let's look at Litecoin. So as you can see, we have rallied all the way up to the top of the Bollinger Band and then pulled back a little bit. Technical indicators for Litecoin are very bullish at this point. So I said yesterday that we were most likely going to go 150. We did break 150. We went all the way to 153. So very close. But top of the Bollinger Band here looks like it's very resistant. So we may see a pullback towards the middle of the Bollinger Band before we go and target 175. We are trading above these moving averages, and as long as that is the case, we are going to go higher. Technical indicators are looking very promising for this cryptocurrency, but pullbacks towards the 20, that is basically buying opportunities at this point. So let's look at NEO, the Chinese Ethereum. So we have broken the middle here of the Bollinger Band, and this is looking very promising. We are most likely going to head towards the top of the Bollinger Band here at $26. So we were topped here at $28.49, and then broke down significantly, lost well, a ton of its value, near a quarter of its value. However, technical indicators here are turning around. They are looking very bullish, and if Bitcoin, for example, is going to target 40,000, probably breaks 40,000, it will basically drag all the other cryptocurrency with him. So yes, pullbacks from here towards the middle of the Bollinger Band or the 20 exponential, that is basically major buying opportunities at this point. Target is first $26,052, and then these previous highs at $28. So hope you found this helpful. You're welcome to support the channel by subscribing, hit the like button and the bell button to see our newest videos, and you're welcome to join us over at Patreon. The link is down below. Good luck and thank you very much.
Hi, Andreas. What are the worst practices to store Bitcoin? I love this question because I often get asked the opposite, which is what are the best practices to store Bitcoin? And I've talked about that extensively. So thank you, Enrico, for giving me the opportunity. What are the worst practices to store Bitcoin? I would say the absolute worst practice to store Bitcoin is to store it on a custodial service, meaning they have the keys and you do not. That is accessed primarily through a web interface and does not have two-factor authentication. I would put that at the absolute top of my list as the worst ever way to store Bitcoin. If you store Bitcoin on a custodial service, you don't have the keys, and it's accessed through a web interface, which means that you have to type a username and password into a browser, which may or may not be at the correct site, which may or may not be on a computer with a keylogger or Trojan. And there's no opportunity for two-factor authentication, or the two-factor authentication is laughingly simple, like SMS-based text message two-factor authentication, which at this point in the internet security history is criminally negligent to have SMS as your two-factor authentication, which is why it's preferred by all of the banks. Then in that case, you are at huge risk of losing that Bitcoin. It can be stolen by the exchange, it can be stolen by someone in the exchange, it can be stolen from the exchange, it can be stolen when someone sniffs your password from your browser using a Trojan, it can be stolen when someone simjacks your phone, or if you don't have two-factor authentication, or so many different ways it can be stolen, and you will have absolutely no recourse. So if it is stolen, it's like, whoops, sorry, gone. All right, so if a custodial no two-factor authentication web interface is the worst, the second worst would be non-custodial no two-factor authentication web-based, which would include various web wallets like blockchain.info or blockchain.com as it's called today, where, again, phishing attacks are the primary way that that wallet is stolen, and it happens so often. So again, that's a very bad idea. You need to add two-factor authentication, or preferably move your coins somewhere else. Third worst practice to store Bitcoin is on a very poorly secured desktop computer using some kind of desktop application in a hot wallet with very little in terms of password. But even if you have a password, if it's on a desktop operating system, like, I don't know, Windows 7 that hasn't been patched in years, even if you have a password, it can easily be sniffed by a Trojan or keylogger that's installed on that computer. And so, when you have an operating system like that, the question is not, do I have a virus, but how many and what varieties of viruses do I have? And how much of my information are they currently leaking? So that would be my third worst option. And I think I'll stop there, because from there it starts getting better. So, for example, mobile device applications, hot wallets on mobile devices where you control the keys with a mnemonic, generally pretty robust because the mobile operating system is robust. And then we start getting into hardware wallets and various forms of cold storage, multi-sig wallets, hot, cold, multi-sig, and multi-factor multi-sig, and things like that. So it gets better from there. The first three that I gave you, those are almost guaranteed to make you lose your money.
If you enjoyed this video, please subscribe, like, and share. All my work is shared for free, so if you want to support it, join me on Patreon.